Thank you for joining us today for Pat Gorman's Hard Money Watch. Today we have a very special guest joining us, and it is always a pleasure when we have a chance to get together and talk about the precious metals markets with one of the best, David Morgan. David Morgan is the editor of the Morgan Report. He is the founder of silver-investor.com. He has degrees in finance and economics as well as engineering, which creates a unique combination that led to the creation of silver-investor.com. And the Morgan Report covers economic news, the global economy, financial health, and currencies, and, of course, precious metals. It's one of the most respected precious metals newsletters that you will find anywhere. And really, it's done on three different levels. Maybe we'll get into a little bit of that as we continue. David has appeared throughout the media on national television and in the national press, including CNBC, Fox News, BNN in Canada, the Wall Street Journal, Futures Magazine, the Gold Report, on and on. And it's always a pleasure to welcome David Morgan. David, thank you for joining us.
Well, I won't live up to that intro, but it's all true, and thank you very much for having me on the show.
Well, it is all true, and you are one of the most respected people I know when it comes to silver. This is your life's work. You have become a silver aficionado par excellence.
Well, thank you so much. I'm going to digress slightly, but when I was working on my finance economics master's degree, I remember that one of the professors called me a silver expert, and that was the first time anyone had ever referred to me in that context. And, I guess it kind of stuck. But anyway, let's move on.
Let's start with just some basics here. What are you seeing as far as the performance of silver and gold these days?
Well, first of all, to give some history, and I think most of the listeners to Hard Money Watch are well aware of these markets. We had a tremendous run in 2011 where silver broke out from about the $19 level, went to 26, stalled out slightly, and then QE2 was announced, and it rocketed from 26 to 48 in a very short time frame. And being objective as I can, I'm biased toward the precious metals for a variety of reasons, but being as objective as possible, I knew, seeing that kind of a parabolic move in silver, and gold did something similar, that we would have about a 1.5 to 2 year consolidation period. This is just the way markets move. It's the way it is. Manipulated or not, that kind of a move with that kind of volume, where the CFTC came in and decided that they were going to increase margin requirements, which is typical of any commodity that's moving, that rapidly, and the markets are getting overheated. In the case of silver, however, they upped the margins like 4 or 5 times before they're able to basically quell the market, and then, of course, the price shot down very significantly. So the point is that I knew it would take a long time for all of that market activity to digest. We're there now. It's a 1.5 to 2 year process. It had 2 years would be April 2013. I think it's ending. I think that we're going to be seeing $35 to $40 silver by the end of the year. The way to be sure technically is to look for the $35 level and see that silver posts gains over $35, and it maintains it over $35 for a week or so, and then you're basically assured with a very high probability that we're ready for the next move up.
We have seen a move up through the beginning of October, and then a move back down. Nothing that particularly concerns me, but is there anything behind that move down? And in the past week in particular, we've seen a nice move back up again. In this shorter term here, what is that telling us?
Well, increased volatility, of course, and, the reason being for any market to move, of course, is buying and selling pressure. I rely on several factors, one of them being the commitment of traders reports, and I do these updates, for our members on the website. I also do some actual charting in front of people that are on that service. But regardless, I saw that we were in a situation where I expected to see a sell-off, and lo and behold, here it is. And the reason being is that all markets move up and down. The silver market is no exception. And for every long, there has to be a short in the futures markets. And so every time the market moves from, say, the 26 and change level all the way up to 35, which is what we saw, and, in a shorter context, we saw it move from 28 to 35, and I called that move for the people that watch my trades. We're going to get some kind of a pullback. We did, and that's normal. And the Commander Trader shows what the commercials are doing, and they are pretty much the paper traders that do have a great deal of sway in the market, and you have to pay attention to that, and I do. So it's basically normal market behavior for the silver market. I mean, people say, are these markets manipulated? And the answer, from my perspective, is, absolutely. Look at the working group on financial markets, read it, see who, it's at law. You can read it. It's public domain information. Basically, these, what's referred to in slang terms as a plunge protection team, can basically come in on any market that they deem they wish to, and it's all legal. But that doesn't prevent the bull market. The bull market is totally intact, and yes, it's going to get hammered from time to time, but if you're prepared for it, you know how to read the tea leaf, so to speak, you can do well as a long-term investor or on an intermediate-term trader or both, which is what I choose to do, and I basically, again, show my work to those that are interested.
You do share your work. Tell us a little bit about the newsletters. There's the Morgan Report. There is silver-investor.com. And, of course, you've also been doing a lot lately. You have a whole channel on YouTube, Silver Guru, I believe it is.
Well, that's correct. There's basically a few levels of service. The one level is basically for buy and hold people, and then there's one that's for people that want to see, what my trades are, and we do a lot of videos that are for members only. I mean, everything you see on YouTube is a video or an audio that's turned into, a video, so to speak. That's all public domain information. In the members portion of the website, when I do a conference like we just did here in Spokane, Washington at the Silver Summit, we filmed 19 interviews. And most of them were with mining companies that we either like or are neutral on, but a lot of people want the information. It's a great way to get information when myself or one of my staff sits down with the mining company and basically holds their feet to the fire. And that's, something that we do. I think we're one of the few services, maybe the only one, and I don't know if we're the only one, in the mining sector that goes to the kind of, lengths to provide information to our paid members. And the final service is basically for very high net worth people or hedge fund managers. And all of that's detailed on the website. If you're more interested, you can go to the website and you can go to the right-hand side and use the pull-down menu and look at the different services available and what the costs are. By the way, costs will be increasing at the end of this year. So if anyone is interested in the paid membership portion, you can check it out. You can lock in this price that's rather low by industry standards and remain at that level for as long as you choose to remain a member. So it's sort of a good deal if you're, predisposed to learning as much as you can on the precious metals arena.
Probably a value at much, much higher prices. Let's talk about some of the places we may see prices going here. I think earlier in the year you had been looking for somewhere, and correct me if I'm wrong, but I think you'd been looking for gold around $1,800 by the end of this year and silver around the $40 range. Is that correct, and do you still stand by it?
It is correct, and I do. I really think that now that the election's over and all that's coming up with the fiscal cliff and all that's going on in the global economy, that the precious metals have got room to move to the upside.
Is there anything in particular on the monetary side? We've already seen QE3 to infinity and beyond. We had a little bit of a pop in prices, I think, related to that. But is there more that we can expect to see from central bankers?
Unfortunately, yes. I mean, right now, this QE2 infinity is probably or could be the last announcement by the central banking authorities, which of course is the Federal Reserve, but it really is global at this point in time. I mean, anyone that studies these markets knows that the Fed actually intervened in the euro crisis in a very significant way. So the point is they don't really have other options. The only option they really have is to continue to monetize the debts, which means, money printing in slang terms and in specific ways. I mean, this is all digital money these days. But you can never, borrow yourself rich or print yourself out of these situations, which is what they're trying to do. And again, they don't really have an alternative. So that means that the currencies globally will continue to depreciate, and yes, they'll fluctuate one against the other over time, but they all fluctuate versus the precious metals, which is the ultimate currencies, and is independent of whatever currency you're in. So if you're in the British pound or the Japanese yen or the euro or the U.S. dollar, it doesn't matter from a longer-term perspective. They're all going down, and they're all basically tied to the U.S. dollar, although a good verification of what I'm saying is to look at the financial markets themselves. And many are getting out of the system of U.S. dollar-only settlement. You have Russia and China settle in each other's currency. They're usurping the U.S. dollar. China and Russia, India and Russia as well, Japan and China. On it's going. So these are very, very big clues that if you're paying attention, you can clearly see that the U.S. dollar is starting to lose its worldwide reserve status. And there are people, nation states, that basically want to exit the dollar. The problem with that is it might work for those nation states on a short-term basis. But on a long-term basis, it isn't really going to help much, because even if the dollar goes down and they're trading in each other's currency for settlement, those currencies are, again, fiat-based, and they're really not worth anything in reality. And so they're really not going to be able to protect themselves that much. And ultimately what will have to happen, in my very studied view, is that there'll have to be some kind of a tie to a commodity-based standard such as gold or silver, but probably this time around there'll be some kind of basket of commodities with some kind of gold cover clause, but that's a best guess. No one knows for sure.
Yeah, that's an interesting idea, and I'll throw out an alternative, and as we return from the break, I'll ask you to respond to it. One is that instead of a commodities-based reserve currency, we go to basically a digital type of world reserve currency, if you will. I think we've already started to see this somewhat. You can go pretty much anywhere in the world these days and put it on Visa. More with David Morgan in just a moment. You're tuned to Money Radio. This is Pat Gorman's Hard Money Watch. Our guest today is the Silver Guru. That's David Morgan from silver-investor.com, silver-investor.com, and editor of The Morgan Report. David, right before the break, I was saying, what about the idea of some sort of a digital currency? It seems as if that's where we're really kind of headed right now.
Oh, I have to agree. I mean, people have asked me in the past, and I've used that argument, that we're sitting in a situation where aren't you worried about, the one world currency? And I said, basically, we have it. When I travel the world, and I do, I just throw my Visa card out there, and I don't worry about the exchange rate or anything else. It's accepted worldwide. So from a practical standpoint, yes. The only hiccup with that is it's based on a con game. It's a confidence game. If you even read the Federal Reserve's website, they're pretty upfront. They will tell you that this currency system that's now in place is based on confidence. Well, confidence is, the long-term word for a con. It's a con game. It's a confidence game. And when enough people lose confidence in the currency at a rapid enough rate, that's when they have a problem. And so I'm forecasting that could or would, and I think will, take place at some point in the not-too-distant future, whereas the argument is otherwise, that the confidence stays intact enough that this degrading the currency will take place and people just accept it and go along with it. And therefore, this digital currency system will continue.
What is the role of silver as money, then, in this kind of a new digital world?
I'm sorry, I missed part of that.
I say, what is the role then of silver as money in this new kind of a digital world?
Well, taking that tack, there wouldn't be any really. I mean, the argument is strong and good. Could we continue this path of digital currencies worldwide and the bankers stay in power, and there wouldn't be silver necessary. Certainly, there isn't silver really used much in monetary transactions now. I mean, there's a little, teeny bit. It's not even worth mentioning. But it doesn't mean it wouldn't remain as a good investment, because even in an all-digital world that continues ad infinitum, silver is a rare, precious element that's going to, in paper terms or in digital money terms, continue to increase in value. So even if it isn't used, and quite frankly, I doubt silver will be used in the monetary system ever again. Gold, that's a different story. I think there's a possibility that gold has a much greater chance of re-entering the monetary system, far more than silver does.
When you look at the price of silver, how much of it is industrial and how much of the pricing is related to silver as money?
Oh, that's about a 50-50 mix. It's actually not quite that high. The industrial side is a little over 50%, and the other 50% is roughly half money and half jewelry. So the monetary component of silver is probably 25% or so. The problem with making that statement is it's really tough to get a handle on the real numbers, even though there are two great studies that are done, one from CPM Group and one from GFMS. If you study their numbers, it's pretty difficult to see where they come from, because basically they do a math problem, an arithmetic problem, really, and they say, well, there's this much recycled, this much in industry, and so then they just subtract the rest, and then out of that, the remainder, they just kind of fudge the numbers until they come out and match what's been mined and recycled. So, that's up for interpretation. I think the investment demand is probably far greater than what's reported in either one of those studies, and the amount of jewelry and silverware that's shown in those studies is overstated.
Do we have a shortage of what is being mined and recycled versus what is being used?
Well, I'll answer that in hopefully a very succinct way. If we look at the amount of silver demanded from all demands and mining does not cover total demand. If we add in recycling of silver with mining and look at total demand, it does cover it. So without recycling, there would still be a deficit, but with recycling, there isn't a deficit. We basically have enough supply on an annual basis now to meet the total demand.
Is there any anticipation that we will see more mining in the year or so ahead?
Yes, the mining activity that we have going forward is significant over the next couple of years, and then it tapers off. So we still have a fair amount of new silver coming to the fore in the next couple of years. But after that, then I think it's actually going to slow down. And I actually have forecast, and I'm sticking with it for now unless I get different data, that we're going to go back into a deficit probably in around 2014, 2015 timeframe, because I see significant increases in not only investment demand, but what's going on in the industrial side of the silver equation.
The industrial side of the silver equation is most interesting, and I also want to take a look at investment demand as well, because it's such a small market, and I think it'll help if we can identify the size of that market, because it is a market that, because of its small size, I believe can be extremely volatile. But the industrial side is also very interesting. Silver is used in ways that most people just don't realize. But I know that David Morgan does, and so we'll follow up on that as we continue on Hard Money Watch. This is Hard Money Watch. Hard Money Watch is brought to you by Resource Consultants. Thank you for joining us this morning and every Sunday morning for Hard Money Watch. I'm Sinclair No, in for Pat Gorman, and our guest today is David Morgan. He is the Silver Guru, and if you'd like to find out more about David, go to YouTube and you can listen to some of his reports. He's on the Silver Guru channel, or look up Silver Guru 22. But if you'd like to really dig in and get the real education on what's going on in the economy and the metals markets, you can find out more at silver-investor.com. silver-investor.com is the website, and that'll lead you to information on the Morgan Report, which is a highly respected newsletter that takes a look at what is going on in the economy, silver markets in particular, and has proven itself to be of great value over the years. You've made some really good calls on silver over the years, David. You really have.
Well, thanks. Yeah, so far so good. I haven't been perfect, but I've been pretty good. I called the bottom in the breakout when that happened. I called the first top at 860 and the subsequent bottom there. Called the $21 top. Called the $48 top, and I called the bottoms subsequent to all those, with the exception of the 2008 financial crisis when silver made that $21 top and then came down. I thought $12.50 was the bottom. It turned out it actually got under $9 very briefly. What's interesting about that call was that on the retail side of the silver market, the cheapest you could buy silver was about 13. So my $12.50 call on, from practical terms for smaller investors was correct, but the futures market was, as I said, under the $9 level briefly. So I missed that one. If you look on a long-term chart and you say, geez, you called $12.50, it looks like a beautiful call. But if you're using leverage, you're not going to be too happy. But regardless, I do my best. I always, no one can get them all right, and I haven't, but I've gotten close.
Let's talk about the size of the silver market and what that means for investor demand. We're really looking at a very small silver market for investors, aren't we?
We are. In the terms today, when we're talking trillions of dollars, the total annual supply of silver, counting mining and recycling, is roughly 1 billion ounces. So 1 billion ounces of $30 an ounce is a $30 billion market, which might be a lot of money for you personally or me, but certainly in the terms of the financial markets, it's absolutely pathetically small. And that's why this market can be moved around so easily, because it's such a small market. Any significant buying will move it up, and any significant selling will move it down. And again, it's just a very, very small market.
Do you think that it is a manipulated market? I know you do, but how is it manipulated beyond the simple use of margins that we've already talked about?
Well, I do, but I want to qualify it because, the major trend cannot be manipulated. It just can't. There's just too many free market forces still available. Are we in free markets? In most cases, not totally free markets, but there's enough free market forces for gold and silver to continue on the upward path. So you can't alter the ultimate upward trend. Within that trend, from time to time, you certainly can slam the markets down, and that's done by selling massive amounts of gold or silver or wheat or whatever the market is on paper, because the futures markets are where the price is determined, and these markets can be manipulated at times by commercial interest or banking interest or whomever has a vested interest in seeing the price go down, because you can profit on a price move up or a price move down. Some of the public doesn't know that, but it can be done quite easily. In fact, that's how the futures markets professionals usually operate. They usually operate on the short side or profit when markets go down, not up. So silver's no different, and it does happen, and it's not easy to forecast, but it's really not that difficult. And so that's just the way it is. So is it manipulated? Yes, but I don't think it's manipulated to the level that some of my peers and friends think. These guys believe that these commercial interests and these trading funds, et cetera, are in the market, every single day, and they're doing this and that every day. And I don't. This high-frequency trading and computer trading certainly is something you can consider. And do they influence the market? Yes, they do. But again, my take on it is it's really not to the extreme level that some of, my peers and colleagues, et cetera, think. I really think that the the free market forces are really, more significant than they do. And I do believe that over time we're going to see higher prices in these markets, regardless of what these computer traders are doing or the banking system wants to do, keep these markets quiet.
And I'm not a big conspiracy theorist. I'm really not. But we have seen the LIBOR rate rigging scandal. We know that interest rates have been manipulated. That's happened. There have been fines already handed out. There will undoubtedly be more. And so if they can manipulate the largest and most important interest rate in the global economy, it is fairly easy to imagine that there is some manipulation of the much smaller silver market, which I would have to imagine would be much easier to manipulate. My question to you, though, is the CFTC doing anything about market manipulation? And if they were to do something about market manipulation, would that remove the ceiling for silver prices?
Oh, excellent question. Well, yes and no. Yes, they've been looking at the silver market for the third time in recent years. It's been ongoing for 4 years. Basically, nothing has happened, and I don't expect much will. If anything were to happen, I believe what it would be is that there would be some position limit requirement with an exemption for the commercial interest. So basically that would mean nothing. It might make the public happy that don't understand these markets. And they would say, there's limits on silver trading. You can only have this many contracts. But then if you read the fine print, it'd be the same situation that currently exists. It says, well, if you are a commercial hedger, you're exempt. You can short or sell forward as much silver as you need to for your business purposes. And so I really don't think, anything will be done. I don't think these lawsuits are going to actually see the light of day, meaning that the CFTC investigation is going to say, geez, we just didn't find anything wrong with the silver market. And if that's not the case, then, again, what they probably will do is say, we found a little bit of problems here and there. Once in a while, some big bank comes in and sells a great deal of silver in a couple of mouse clicks, and, we got to prevent this, so here's our new rule. But then again, if you read the rule behind a rule, you see what the fine print says, it's probably going to exempt these people that are causing a problem to begin with.
What about for most investors? And I realize that perhaps for some of the for the institutional investors and industrial investors, folks who would follow along with the Morgan report, but for most investors, your take on physical delivery, and is there enough of just the average investor taking physical delivery to put pressure on those big firms that may be behind some of the manipulation?
Well, absolutely. My take is that, to start a precious metals portfolio, you need to buy precious metals, and I'm not a bullion dealer. So that's where I think everyone should start. And right now, there's less than 1% of the population that is in the physical market of precious metals. And 1% is a very small number. So all we would need, in my view, is to double that, and probably not even that much, but double the amount of people that are buying precious metals today in the next, year or so, or 2 or 3, whatever it takes, to put substantial pressure to the upside, because paper doesn't equal silver, paper doesn't equal gold. We're actually starting to see it on the gold side more than silver currently, because a lot of these nation states that still hold gold as a reserve are asking for their gold back. You had Venezuela do it recently. You're seeing this German thing that has broken out in the news recently. And so a lot of these countries are saying, don't tell me my gold's safe, send it to me, show me, don't tell me. And this could be one of the starts of something significant. I don't know. I don't want to get people too excited about it, but I do think it's worthwhile bringing it to their attention.
Meanwhile, let's take a look at the industrial side of silver. When you learn about the uses of silver, for most people, it's really rather eye-opening. The world almost couldn't exist without silver.
Well, absolutely. I did an interview recently about silver, and I said basically no silver means no electricity, and no electricity, think of the kind of world we'd have. No iPad no iPhone, no lights. And that's not an exaggeration, but there are other, critical elements as well. But silver is very, very key. Would you like to hear about a few of the more recent uses for silver that probably are rather obscure but very interesting?
Oh, yeah.
All right, let's just go through a few of them here. Silver is being tested as a fight against cancer. Of course, you can use silver in, the solar systems to get off the grid. We all know about that. SAM and DNA or silver are used to produce a microscopic memory chip. Self-cleaning genes are almost here. That means that these are silver-impregnated genes. That basically silver is a biocide, so it actually prevents, you can wear your jeans longer because they're not going to smell, and the dirt isn't going to have really an effect on them. Of course, you'd have to wash them eventually, but basically it, has them last longer. It's great for, like, camping trips or athletes. I actually have gym shorts that are silver impregnated like that, and shirts when I do my travels because I still work out, and it's nice to have that, especially if you can't, if you're at a hotel for like one night and you can't get the laundry services done. Silver is used in wound dressings. That market is growing significantly.
Mm-hmm.
What else have we got? Nanoparticles used for silver is very, very significant, and the nanoparticle area is used and continues to grow significantly in both water purification and food packaging, and you're going to see that market continue. The touch screen type TVs, those are all using silver. You can use it actually as an infection preventative because of the biocide properties. Even the Silver Institute has stated that some of these bottled water manufacturers use silver to purify the water so that there's, no backlash by having some bacteria in the water. Used to be kind of a topic that no one wanted to talk about colloidal silver because, it was kind of a fringe thing that only these either health nuts or silver nuts were talking about, but it's kind of gotten mainstream in the last several years where they don't call it colloidal silver, but a silver nanoparticle. That's exactly what it is. And this is used significantly throughout the water industry and coming in more areas where these antibiotics are not able to take care of some of these situations that are now becoming very, very resistant. So, what else?
Let me kind of stop you for a moment, because one of the things that you just kind of touched on very briefly there was solar. And it seems to me that solar has been, over the past few years, one of the major growth areas. We're seeing really an explosion of solar. It's been very big, of course, over in Europe for some time. German and the Scandinavian countries have been very active in solar. France moving away from nuclear, moving more and more toward solar. And, of course, there's been a big boost over here in the United States. China, meanwhile, has been trying to jump into the solar realm, and there's even been some accusations of dumping on the part of the Chinese with regard to solar panels. Do you anticipate that the solar market is going to continue to use silver to the extent that it has, and that it will continue the kind of growth that we've seen?
Oh, great question. I digress slightly. Were you at the Pat Gorman conference when I did that 10-year study on silver on the big screen? I think you might. Oh,
yeah, that was a couple of years ago.
Yeah, right. At that time, I showed that solar was one of the biggest growth factors on the industrial side. It basically matched that forecast that I showed during that speech up until basically right now. I mean, it's basically on track. Going forward, I think it's going to slow down. One, for a couple of reasons. Germany was the leader using solar panels on a government scale, and even Germany's having problems in the Eurozone now. And since these are government-funded situations, I know that it's going to be curtailed to some degree. Are they going to use as much silver per panel? And the answer is no. Like any business and any human endeavor, people with a profit motive, which is free market, which we still have a bit of that left, will squeeze the margins, meaning they'll find more efficient ways to produce something, and they'll find ways to use less of the highest of any cost product like silver in the panel. So going forward, I have dropped the forecast slightly from what I showed in that study that I did several years ago. But Japan has come out with an article recently about how they plan on increasing their solar usage due to this Fukushima situation and the backlash they're getting for nuclear power. So right now, to be conservative, I would say that the growth is going to continue, probably not as robustly as I first forecast, but I could be wrong on that because of the Japan situation. We just don't know. So certainly it is significant, and it will continue. That's about the best I can say at this point in time.
All right, good answers, good information. It is kind of fascinating how silver has so many different uses, just really remarkable. We're talking with David Morgan. He is editor of The Morgan Report. The website silver-investor.com. That's silver-investor.com. And you can find out more and listen to what he has to say. If you go to YouTube, check out the Silver Guru channel. More with David Morgan in a moment. This is Hard Money Watch. This is Pat Gorman's Hard Money Watch. I'm Sinclair No, in for Pat Gorman. And our guest today is David Morgan, and he is the Silver Guru. You can check out some of the videos on YouTube under the Silver Guru channel. And if you'd like to find out more and subscribe to the Morgan Report, probably the quickest way is to go to silver-investor.com, silver-investor.com, or themorganreport.com. And I'd like to thank Resource Consultants, and you just mentioned a moment ago, David, the wealth protection conferences that they've put on over the years. They've done a great job of educating people about metals, gold and silver, and they do it through newsletters for their clients, and they do it through the wealth preservation conference that they put on each year in the springtime. And we had mentioned as well taking physical delivery, and that's an important part, I think, an important way for people to get started with a portfolio. And I'm happy to recommend that you call Pat and Linda Gorman at Resource Consultants, 480-820-5877, 480-820-5877. And their website is buysilvernow.com, buysilvernow.com. I always like to talk with you as well, David, about the ratios that we see, the gold and silver ratios. And right now we're, in the neighborhood of about 50 to 1?
Right, it's a little higher than that, but yes.
Yeah, just a little low.
It's been as low as 35 to 1 in this bull market so far, and as high as about 80 to 1.
What is the range that you look at? Is the upper range somewhere in the neighborhood of 60 or so?
Yeah, I'd say close to that. That's right. I mean, in current, where we stand currently. I mean, when I said that the bull market in silver was beginning, when it started under 4, it had to break above 555. That number sounds so pitifully low right now, but that's what it needed to do, and it took silver quite a while to breach the 555 level and stay there, and it did. That was September 2003. I called that the start of the bull market. The ratio there was at 80 to 1. And now, again, we're in the low 50s to 1. So for one thing, a fact is a fact. That's where we're at. What that shows for an absolute truth is that silver has outperformed gold during this bull market. But also silver is far more volatile. And people ask me, well, should I buy just silver? And the answer I give is almost always no, unless you can really accept the volatility. Gold balances a metals portfolio. I think you have a precious metals portfolio, which means you have a variety of metals investments, including both of the precious metals, and if you care to, maybe sprinkle it with platinum, palladium. I don't recommend that to everybody, but in a few cases it makes sense.
No, go ahead.
So the ratio is something that I can trade. I do it from time to time. Anything near the high 50s, I think you can swap one for the other, where silver is undervalued or overvalued, and then when silver gets overvalued relative to gold, we get down into like the under the 40 level, probably the 35 level again. Then you might want to take your silver and swap it back into gold. I don't use all of my metal to go back and forth, but I use a pretty healthy portion of it. And if you do that, you can come out with significantly more metal if you do it over with a long-term, horizon. This is not something you do on a weekly or a monthly basis. This is something where if you're in for the full bull market, which I am, you'll probably still have a couple more, maybe 2 or 3 more opportunities to make those kind of swaps. But it's not for everybody, and you pretty much have to study the market carefully and be on top of it almost daily so that when these opportunities do come up, you're able to take action quickly.
How do you explain the movement of metals with this whole idea of risk on and risk off, and how should we approach that as investors?
Well, I think it's more for the mainstream media that's kind of coined the term. I do think it has some application, but, risk on, risk off, I mean, the idea that that there's a higher risk in the markets and therefore you need to stuff more metals in your portfolio because risk is on, and then, things are going to get good and the risk is off and you can sell your gold. I think that's fine for someone that's a professional money manager and buys into the ultimate untruth that these financial systems are going to continue on the same road they've been on without any real repercussions. I don't believe that, but we already talked about that when we addressed the digital currency situation. Mm-hmm. My belief is that times are going to get more interesting going ahead, and the risk on has always been on. It's been on since August 15th, 1971, when Nixon cut the ties to the gold clause for the U.S. dollar under Bretton Woods. And once that was established, take a look at a chart and see what the real value of the dollar's done since then. It's down like 70 or 80%. And that's easily in my lifetime. I mean, I was in high school in 1971, so it's significant.
David, we have just a short amount of time left. In about a minute, care to address the election this past week?
Not really. I mean, I've been asked about that and, what would happen if X or Y got in, and I said it wouldn't make much difference at all. Maybe on a short-term basis it would, but on a longer-term basis, these politicians are going to continue to name, shame, and blame. There's going to be a lot of finger-pointing and a lot of rhetoric going on, but they're not going to do anything significant to truly help the country. No one's really got the guts or the spine or the backbone that it's going to take to address the real issues that we have with any significant legislation changes that will make a difference. So you're going to see a lot of naming, blaming, and shaming each other across the aisle, and the Democrats this and the Republicans that, and a lot of name-calling, but nothing's going to get resolved. Markets have a way of naturally righting themselves, and that usually means that there's huge distortions in the market, and that's probably what's going to take place. Mm-hmm. And the thing, in my view, that's going to remain standing are things that are real, things that we need. It's the commodity sector. It's food. It's energy. It's metals. That's what's left standing. I'm sorry, but that's the way I see it.
David Morgan, silver-investor.com, themorganreport.com. On YouTube, go to Silver Guru or Silver Guru 22. Those are the channels on YouTube. David Morgan joining us. And, David, I'd like to thank you so much for taking time with us today. Let me also mention that today is the 11th day of the 11th month, and we are heading up a local time to the 11th hour. So it's very appropriate for me to say thank you to all who have served our country as veterans. There would be no America without veterans. So today, on Veterans Day, on the 11th day of the 11th month, we thank you for your service. David, thank you for joining us today.
Always a pleasure. Thank you, Sinclair.